Hello there, this is Nero. In this session, I'll be doing Elliott Wave Analysis for gold, and we'll be looking at possible price targets for this market and possible Elliott Wave progressions for the same. So before moving any further, let's have a look at the last discussion that we did. In the last discussion, I was of the view that the gold market is in a flat type of correction, and a flat type of correction, it was moving as first leg, second leg, and the third leg. I was expecting the third leg to be down and to give a little deep retracement. This was our main hypothesis. The secondary hypothesis stated out that the wave 1 completed over here and 2 completed over here, and the first hypothesis stated that the wave 2 is going as a flat and should complete over here. The problem with this hypothesis of 2 completing over here was that the retracement was very small, not even complete, 38.2, which does not seem to fit in the characteristic of this market. And that is why I had to switch my view that this is completing as a flat type of correction. Let's look at how this market progressed from there on. So as you can clearly see, it only touched the 1250 mark and never went near 1236 or even below it, which I was actually expecting. Basically, I was expecting wave 2 to have a little deeper retracement, and which did not happen at all. So that means something else might be going on in this market, and definitely we had to look at the charts to see what is going on. At this point, I would like to just clarify that we will be discussing 3 hypotheses in this particular session. As always, the discussion would be in depth, and if you want to know how this market might progress or my view of how this market might progress, then you will have to watch this video till the very end. Also, you should have the basic knowledge of Elliott Wave to understand this discussion completely. If you do not have the basic knowledge of Elliott Wave, then I recommend you read Mr. Robert Prester's book on Elliott Wave, or you can also go through my video course if you find that to be an easier thing to do. So let's get started. Okay, so let's just do with the chart over there. Okay, so our hypo 1, which I think is a less probable case scenario now, is that this was actually wave 1 and this wave 2 completed as an A, B, C completing over at 1250 as a flat correction, because the C never actually went below the ending of wave A. So this would be a flat type of correction. And after the C completing as a flat type of correction, we are seeing 5 legs up from this point on. Okay, so this would be something like 1, 2, 3, 4 and 5 going up from here, which would basically mean that we are in the first of third, and that would mean that the first would complete somewhere over here, and then we should see a 3-leg down after the break of this trend line, and then we should progress as a third of the third from there on. So that would be our hypo 1, and I don't think that this is very likely, because as always this second would be an even lower retracement in that case. Let's look at hypo 2 and hypo 3 now. So before moving to hypo 2 and hypo 3, let's just see the retracement level of 2. If it had actually completed as 2 over here, then we will have our fifth retracement starting from the starting point of wave 1 to the ending point of wave 1, and so that would mean that we have not even completed the 23.6% retracement. See, the 23.6 is also not completed, so that just does not fit into the characteristic of this market. So hypo 1 is least probable. Hypo 1 would suggest us to short this market after a break of this trend line, retest and then leg down, and the targets for the downward side in case of hypo 1. So the targets for hypo 1 playing out, assuming that the first of the third completes somewhere over this 1294 mark, just an assumption. Okay, if the first of the third complete somewhere over here, then we will be looking for market to retrace around 50-60 mark, and also keep note of this consolidation. So basically around 1270-1265 levels we should expect the market to correct if hyper 1 is playing out. Once again, this violet trend line will play an important role in understanding how this market is going. Of course, we will look at it as a guiding stick for shorting this market. The break of this trend line is important, utterly important. I will personally not be shorting this market without a break of this trend line. Okay, so this was hyper 1. Let's look at hyper 2 and 3 now. So basically I have read the counts over here. I have made 3 to come over here, 4 to come over here, and 5 to come over there. And basically that means that if the fourth is complete over here, then we are progressing as a 3-3-3-3-3 type of ending diagonal type of formation. Let's look at that in a bit of detail. Okay, so we have the ABC for the first of the fifth, ABC for the second of the fifth, ABC for the third of the fifth, and ABC for the fourth of the fifth, and ABC for the fifth of the fifth, completing the ending diagonal. And if this is an ending diagonal, then the correction that should follow over here should be very sharp. That is, we will see a big fall in very small amount of time, and that should basically touch at least this level of 1244 around region. Let's look at the targets in a bit more detail for hypo 2, which is the case of an ending diagonal. So if this hypo 2 plays out, then we will be looking at correction. Let's again just assume that it is completing around 1294 level. Okay, that's just an assumption because we are not sure if this last leg of the fifth leg, that is the fifth leg of this ending diagonal, is complete or not. So we are just assuming that it will be going a little bit up and possibly test this trend line and then break this violet trend line and then go for the correction that we are expecting. So if this assumption is anywhere near correct, then we should see a retracement up till at least the 50-60 mark. Again, don't forget this consolidation over here. Markets love to pull back till consolidation, so this consolidation is also coming in the bracket zone of our fib targets at the 38.2 and the 50. Basically it's exactly between the 38.2 and the 50. That gives a little bit more confidence from a Elliott perspective. So basically target 1 be 1255, target 2 would be 1244, target 3 would be 1232. Okay, so I will be looking specifically for this target 1244 because it is the base of this consolidation and also the 50 mark, which seems to be the characteristic trade of this market. So that is for hypo 2. Okay, and the hypo 3 is a bit like the same as the hypo 2. We all know that the fourth waves can be complex and can continue on longer than we actually think them to be. So obviously this fourth has to be placed over here also. Again, it would be an ABC type of correction, which would suggest that the fourth did not complete over here but actually completed over here, again as a running flat because the end of A was not exceeded. So if the fourth actually completed over here in this running flat type of correction, then this last leg is an impulse of something like 1, 2, 3, 4, 5, and in that case I would think that the 5 would test this upper trend channel line and then it should break this violet trend line and then it should go for a retracement. Okay, so again there would be the targets would be the same because we don't know if the fifth is complete over here. If the fourth is over here, then we don't know if the fifth is complete over here. And even if this is an ending diagonal, even then we don't know if the fifth of the ending diagonal is actually complete over here or here. So in all these cases, the possible targets would again come out. In this hypo 3 case also, the possible target will again be calculated around this, like completing over here, and then using the 50-60 mark, which were coming at these levels of I think 1256 and 1244. So basically both in hypo 3 and hypo 2, the targets for the downside remain the same. Only in hypo 1 do we have the target coming around at 1270. Okay, so basically I will be very much interested to see the break of this violet trend line, which would be first indication to enter into short side movements. And obviously, since both of these hypos and this hypo are pointing downwards, I would be very interested to take short side trades. Obviously the market can do something that we have not thought of or have not seen in our counts, so we should also consider the fact that something else can play out, and for that very reason we keep the stop losses always in the market. So before ending or concluding this video, I'll just like to point out one more interesting thing over here, is that first the market was in this red channel or red trend line. Okay, after that it moved into this black trend line or black channel. That is, the structure is more fitting in this channel now. And if you see, then it is very clear that the red was something like this, but the black is something like this. That is, the angle is decreasing, basically suggesting to me that the momentum is a little bit decreasing in this market, and that means we should be expecting a correction in this market. It's no law or anything, no rule or such thing. It's just a general observation of mine. I use these trend lines in many different ways. It's just one of those, and I just wanted to discuss because they were on the screen. And so that was all for this discussion. And as always, if you want to learn more on Elliott Wave, then you can check out my video course. Link for that is in the description. If you like the video, definitely hit the thumbs up button. Don't forget to share it so that I get more views and I get more motivation to make such videos. And see you in the next one. Thank you.